In less than 10 minutes, I'm going to give you a simple blueprint to becoming a property investor, starting with nothing. Don't believe me? Well, my name is Gale, and you can look me up and check the links in my description below to double check that I've spent the last 13 years of my life building a UK-wide home buying company, British Home Buyers, a nationwide estate agency, British Home Sellers, and my own personal property portfolio. And I did that starting with no money and no experience. I was 22 when I started. And the most important advice I can give you is you have to firstly understand the difference between quick money and slow money. Because the distinction between the two is, one, incredibly important, and two, getting both parts right is actually the secret to not only starting with nothing, but even if you're already a property millionaire, the key to catapulting your financial success in property into the future. So let's quickly define what I mean by slow money and quick money. But before we do, please like and subscribe because it helps me out. Anyway, slow money is passive income, your property investments, the long-term increase of those property asset prices. It's ultimately what we're all trying to build long-term. The quick money is the creation of quick free cash flow that you can use for deposits to build those assets that produce you long-term slow money. Understanding how you need to create engines that produce you quick money is the key to producing the passive slow money we're actually all craving. And I'll share what my quick money engines are later that have helped me build my long-term property investments. But how do we create quick money engines? Being able to generate quick money, free positive cash flow that you can then invest to buy properties is the main hurdle everyone is faced with, because in reality, 99% of 9-to-5 jobs don't create you enough after living costs to be able to buy significant assets like property to quickly replace your income. If they did, you wouldn't have people needing to work 40 to 50 years before they could retire. In a way, the economy works best if people make just enough to live, but not enough to break out the rat race, break out working within the economic machine, because that is in reality what keeps the whole world turning. So how can you break the cycle and get access to quick money? Quick cash flow you can then use to invest and build your financial freedom in property. You need to create a business. Now, that business doesn't have to be property related. It can be any business that creates free cash flow, quick money, that you can then invest in long-term assets like property. So, for example, Sir James Dyson owns more land than now the king, all through making money selling hoovers and hairdryers. But naturally, most property trainers out there teaching you how to become a property investor with nothing talk about how you can start with no money by teaching you different property related services or tactics, which makes sense if you want to invest in property. You might as well make your quick money engines property related, and they glamorize loads of different ones like property sourcing, rent to rent, lease options, assisted selling, property trading, BRRR, buy, refurbish, refinance, repeat. The list goes on, and I'll explain how to make some work later, as I know all these can seem a bit confusing. But in reality, the one thing you need to bear in mind is, for a lot of property trainers, the very business of offering property education is in itself a quick money engine for them that creates them the free cash flow to build their own property empires. That isn't a bad thing, by the way. It's no different to any other education you pay for, and getting access to good education is worth its weight in gold. For me, I currently make no money from offering property education, but the business I've created is around property sourcing. My business, British Home Buyers, will speak to thousands of homeowners, and we offer to buy their property direct at a discount, or we can help them get a better price by pairing them to an investor to purchase, or we can offer them a more traditional selling agent service. My quick money engine is the fee earned by sourcing the deal for investors, and that helps fund the more capital intensive strategy of buying a property direct to hold long term or to sell on at a profit. The reason I create free property education like this is because if I help you become a successful property investor, you in turn might come to my business to help source you a property to buy in the future, which then helps me provide an even better service for my customers. Now, my team literally speaks to thousands of homeowners a month. We're in the top 10 biggest national online agents, but it didn't start that way. It started with me and a mate dealing with a handful of properties a month from our kitchen table a decade ago. And I've organically grown my quick and slow money engines ever since by providing our customers a service we truly care about offering. So for you, you need to establish what business you want to create to generate you quick money, quick cash flow for you to then invest in slow money assets like traditional buy-to-lets. In reality, if you want your engine to be property related, you can break all these niche property investment techniques like rent to rent, property sourcing, lease options into offering a specialist service backed up by a more traditional sales or letting service. Because in reality, all these services rely on you to be set up as a property agent anyway. So if you're interested in property sourcing, like me for instance, why not create an estate agency? Look for homeowners looking to sell their properties that you can pitch to purchase at a lower price. If they're happy to consider you've got a property at a discount that you can buy or source for an investor at a fee, or if the seller won't consider a lower price, why not pitch selling their property as a traditional agent and still make a fee? Otherwise, all you're doing is fishing for a great deal and throwing away all the instances where you're speaking to homeowners that you could be monetizing by offering a more traditional service. Or if you're interested in rent to rent, why not create a lettings agency? All rent to rent actually is offering guaranteed rent to the landlord and managing the tenancy yourself, something many letting agents actually also do. You can speak to landlords pitching a rent-to-rent service you know is more profitable to you. However, if the landlord isn't interested, why not offer a traditional letting service? Most letting agents charge 10 to 15% plus VAT of the rent collected, which if a landlord is clearing, say, 20 to 30% profit after their mortgage and maintenance cost, pre-lettings costs, it means that you're taking about 50% of the profit as a fee without actually owning the property yourself. I could run through loads more examples like this, but I don't want this video to get too long. So comment below with anything you want me to go into in more detail in the future, and I'll make those videos for you. But the long and short of all this is to create quick cash flow, you need to create a business of some sort. And if you're interested in property, it might as well be property related, because you're then in a position to notice the deals you want to do direct and monetize the rest by offering some sort of valuable service. Now you're making quick money, you can start investing in slow money to build your long-term wealth. So how do you invest quick money into slow money? You invest in property long-term, and all that quick money you've produced is what is going to create your deposits for those property investments. Generally, to get access to sensible interest rates, you need a 25% deposit, and then you can borrow the other 75% from the bank. You've then got a great asset you can rent out to cover the mortgage and make a profit. In reality, at this stage, you have an asset that's going to be making you money slowly, slow passive money, which is the best kind of wealth over 5, 10, 20 years. Your quick money is valuable, but you can't rely on quick money engines over decades or generations, because they need your constant attention in reality and can break, whereas you can rely on the whole on passive slow money assets like property. If you're interested in learning more about property, I'll see you up here.